Please subscribe, like, and comment.
Okay, so, we're diving into some articles that you sent in, and they're all focused on this recent, slide in the cryptocurrency market.
Yeah.
And especially what happened with Bitcoin around, late March 2025. So
Right.
what we want to do in this deep dive is, kind of go beyond just like the surface level reporting of like, okay, the price went down.
Yeah.
We want to understand like what these sources are pointing to as the reasons for this, for this downturn, and what are the significant factors at play and what could happen in the short term,
For sure. For sure. And we've got a lot of interesting sources to help us piece that together.
Yeah, we do.
A real mix. We've got kind of the mainstream financial news, but then we've also got some that are very crypto specific.
Mm-hmm.
So I think we can get a pretty good picture of, not just what happened, but why it matters.
Okay, cool. So one thing that really jumped out right away, just looking at all these articles, is that several of them identify like a very specific time frame, right? Around March 28th and 29th of 2025 as a period of, some significant movement.
Yeah.
And specifically, Bitcoin's price took a hit. Like CoinDesk talks about, roughly a 3% drop within a single day.
Right.
Putting Bitcoin around $82,000, Investopedia, Bitcoin News. They all seem to be pointing to similar figures, right? Around like $83,700, $82,193.
Yep.
So consistent picture of like, okay, there was a notable, downward shift in that very short time frame.
That in itself is significant, right? Like the fact that these different sources all kind of point to that same window
Right.
is interesting. And it wasn't just Bitcoin that saw this, right? CoinDesk points out that some major altcoins, like XRP, BNB, SOL, they also had pretty substantial declines during that same period. Like we're talking 4 or 5%
Wow.
in a 24-hour period.
So does that make you think about whether this was something Bitcoin specific or something broader affecting the whole crypto market? Yeah, it does. And to add to that picture of like a really rapid shift, right? CoinDesk also mentions a pretty substantial amount of liquidations.
Yeah.
They're talking about something like $300 million of long positions being liquidated on centralized exchanges. That's a lot of, leverage that went wrong in a very short period of time.
Yeah, think of it like if you'd borrowed money to bet on the price going up, but when it goes down, you have to sell to cover your losses.
Right.
And that selling pushes the price down even more. So you get these kind of cascading effects.
Yeah.
But there's also an interesting counterpoint in that CoinDesk report. They point out that certain cryptocurrencies like PAXG and XAUT, which are backed by gold, they actually saw gains during this time.
That's so interesting.
So that raises the question, right? Are investors looking for like a different kind of stability within crypto itself when things get shaky?
Right. Are they looking for something that's like a, digital version of a safe haven?
Exactly. It's a really interesting nuance. Now, Barron brings up something different to consider, and this is President Trump's announcement of those tariffs on automotive imports.
Yeah, 25% tariff.
25%. And Barron suggests that this announcement, which happened on the Thursday, kind of contributed to this downturn. And they point out that Bitcoin at that point was already down to like $87,311.
Right.
Which was a pretty significant drop, 26% from its high back in January. And it's important to note that this Barron's article looks like it might have been published before that bigger drop that the other sources reported on the Friday. So it might be that these tariffs were like an early warning sign, kind of contributed to what happened next.
Yeah.
And it wasn't just Bitcoin. Barron's mentions that XRP, Ethereum, Solana, Cardano all saw declines as well. So again, we see that broader weakness across all coins that CoinDesk talked about.
Right. And the connection that Barron's makes is this indirect one, right? It's not that the tariffs directly impact how people are trading crypto, but it's that they introduce this concern about inflation and a potential slowdown in economic growth.
Right.
And when that happens, investors tend to get more risk averse.
Classic risk-off sentiment.
Yeah, exactly. So they might move away from assets like cryptocurrencies that are seen as more volatile.
Makes sense. They might look for things that they think are going to hold their value better in a scenario like that, like bonds or even maybe those gold-backed cryptos that we were just talking about.
Right, exactly. Okay, so Investopedia, their report, which is from the Friday, offers another piece of the puzzle. They point out that some companies that are, very closely tied to the crypto market, their shares, also experienced pretty big drops. That Friday, companies like Marathon Digital Holdings, MicroStrategy, Coinbase, all of them mirroring Bitcoin's roughly 4% fall that day, down to around $83,700.
It just goes to show how interconnected the crypto market is with the wider financial markets, and also how investor sentiment towards the whole crypto sector can spill over into these related companies.
Right. Right. And Investopedia makes this explicit link between those stock declines and the broader market concerns about the economy. They specifically mention things like recent inflation data and consumer confidence figures.
Right. So it's not like this crypto downturn is happening in a bubble.
Right.
It's part of this bigger response to what's happening in the macro economy.
Exactly. And they also bring up this interesting timeline, right?
Yeah.
We had that post-election surge for Bitcoin. But now all this economic uncertainty linked to, Trump's policies, including these tariffs, that seems to have dampened the enthusiasm a bit.
Right. It just goes to show that even decentralized assets like Bitcoin can be influenced by what's happening in the political and economic landscape.
Totally. Okay, so we've talked about market reactions, potential policy triggers with these tariffs, and some broader economic concerns. Let's switch gears a little bit and look at what Bitcoin News has to say about the technical analysis.
Yeah, let's dive into the charts.
They are pointing to some clear, bearish momentum with Bitcoin trading around 82,193 pebbles.
So from a technical standpoint, what do you see as the key signals here?
Well, Bitcoin News mentions a couple of really important levels.
Okay.
They're talking about a resistance zone between $85,000 and $86,000, and that kind of acted as a ceiling, right?
Yeah.
Bitcoin was struggling to break above that, and then there's this support level around $82,000, which was being tested. And then they also talk about these high-volume red candles.
Right, and that's important because that suggests real conviction behind the selling pressure.
Right, so it's not just that the price is going down. It's going down with a lot of force.
Exactly. And what they say about needing to overcome that $86,000 resistance for the momentum to really shift, that's key. If you're looking for a potential recovery until that happens, the technical picture is still looking pretty bearish.
Right, it's not looking great. Okay, so we've talked about market reactions. We've talked about the tariffs as a potential trigger. We've looked at the technical indicators. Now let's talk about macro liquidity, which is something that this TradingView analysis by Capital Flows really brings up.
Yeah, that's a whole other dimension.
Yeah, it is. So macro liquidity essentially refers to how easy it is for money and credit to flow through the financial system.
Right. It's influenced by things like interest rates, central bank policies, the Federal Reserve, what they're doing, just the general movement of money in the markets. Think of it like the overall availability of funds in the economy.
Right. Okay, and this analyst, Capital Flows, they're saying that current macro liquidity conditions are kind of neutral. What are the implications of that for Bitcoin's price?
Well, they argue that if things stay neutral, it might not be enough to drive big new investments into riskier assets like Bitcoin.
Okay.
For that to happen, they say we probably need to see a stronger shift in sentiment, like investors moving away from those safe havens like bonds, and actively seeking out higher returns if that doesn't happen. Bitcoin might struggle to see those big inflows of capital.
That makes sense. If everyone's happy holding on to their, less volatile investments, there's less motivation to put money into something that, swings as much as Bitcoin does.
Exactly.
Yeah.
Now, the TradingView article also mentions something called the M2 money supply.
Yeah, can you explain that a little bit?
Sure. So the M2 money supply is basically a measure of all the money that's out there circulating in the economy. And historically, when the global M2 money supply goes up, that's often been correlated with rallies in Bitcoin's price.
Okay.
The idea being that more money sloshing around means more investment in all sorts of assets, including crypto. But here's the thing. Capital Flows makes a good point. Just because the M2 is growing doesn't automatically mean that money is going to flow into risk assets.
Right.
It could end up in those safe, low-yield investments, or it could get tied up in other parts of the economy.
Okay.
So it really depends where that new money is going.
So it seems like this dip that we're talking about, it wasn't just one thing, right? It was this confluence of factors that kind of all happen around the same time.
Absolutely.
We had the reaction to the tariffs. We had concerns about the broader macroeconomic data.
Yeah, inflation, consumer confidence, and all that.
The technical indicators were starting to look bearish.
Right.
And then we had this macro liquidity environment that wasn't really supporting big investments into risk assets.
What's really interesting is how all those things are connected.
Mm-hmm.
A policy announcement like the tariffs can trigger economic anxieties, which then affects how investors feel, and that can lead to technical breakdowns in the market.
Right.
And then you add in the liquidity situation, and suddenly it becomes harder for those riskier assets to attract investment.
Okay.
It's like this chain reaction.
Yeah. Yeah. So for everyone listening, it's not as simple as like, okay, this one thing happened and that caused the price to go down. It's way more complex than that.
Way more. It's this interplay of global economic forces, investor psychology, and, the dynamics of the market itself.
And all the sources that we've looked at, they kind of offer a different piece of the puzzle, right? Yeah. Barron's is focused on those tariffs. CoinDesk is looking at the immediate market reaction and those liquidations. Investopedia is putting it into the context of the broader market and how those crypto-related stocks performed.
Right.
Bitcoin News gives us the technical perspective, and then TradingView adds this whole layer of macro liquidity.
They all bring something valuable to the table.
Yeah, they do. Okay, so to sum up, what are the big takeaways here?
Well, it looks like the decline in Bitcoin and the wider crypto market in late March 2025 wasn't caused by one single event. It was this combination of factors and investor concerns about the tariffs, worries about the macroeconomic data, a bearish trend in the technical indicators, and then that macro liquidity environment that just wasn't really encouraging people to invest in risky assets.
Exactly. And I think what that really shows is that the cryptocurrency market, even though it has its own, unique characteristics, it's still very much influenced by what's happening in the traditional economy and how investors are feeling overall.
For sure. And we have to remember that the crypto market can change really quickly.
Oh, yeah.
What we've done in this deep dive is look at a very specific point in time based on the information that we have from these sources.
Right. So to leave you with something to think about, given everything that we've talked about, these global economic policies, investor sentiment, technical factors.
What events or pieces of data are you going to be watching that could signal a shift in the crypto market?
Yeah.
What could change the narrative that we're seeing right now?
That's a great question.
Lots to think about.
Yeah, definitely.
Thanks for joining us for this deep dive.
Thanks for listening.
See you next time.
Bye.
Please subscribe, like, and comment.